Now, talking of world domination, and everybody with the good attitude of trying to achieve an incredible result in a short time frame. When it comes to purchasing and acquiring property, and you've helped a lot of people build great portfolios, when do you see it make most financial sense for growth to speed up, to go from residential properties to commercial properties? This is something that I have been thinking about and toying with in my own portfolio. And I don't think there's enough good education out there on when to go from resi to commercial, and when it makes financial sense. And I know it's very difficult because everybody's personal financial situation is different. But what's the typical or the general sort of way that somebody would move from resi to commercial in their portfolio?
I normally see it when people have a little bit more mature business or mature portfolio, because it's a very different thing, commercial, because one of the best things about commercial is all the outgoings are paid by the tenant. Except for land tax generally. So that's a good thing. But one of the downsides of commercial, a couple of things. One of the downsides of commercial is that it can take longer to get a tenant. And so banks generally, when they're lending for commercial purposes, because they know that, they like to generally have tenancies in place when they lend against it. And so if there's not a tenant in place when you're buying commercial, that means they may not have enough income in that structure to service it. So then you've got to use outside income to service that debt potentially. So it is a different financing perspective. Unlike residential, where you can get a letter from a real estate agent to say, this is going to rent for $600 a week. The residential banks will take that rental into effect for residential. Commercial, they don't like doing that. So they can't say, get a letter and say this is going to rent for $100,000 a year. They don't like that. They like to see it in place. This is the lease in place. And some lenders even lend against the term of the lease. So if that lease has only got 6 months to go or a year to go, the bank, say if you went to a big bank, they might say, we're only willing to give you a 2-year loan term. And then you've got to renegotiate the whole commercial loan after 2 years because the lease, some will even match up as Sam. I don't know if you're a commercial resi valuer, but in the commercial space, they could match up the lease term with the loan term. If you only got a year to go, that's not long. Whereas we do have some commercial lenders now that will give you up to a 30-year loan term, just like resi. And they'll give you an 80% LVR or 85% LVR, similar to resi with no mortgage insurance. So there's some pretty cool commercial products out there now, which are basically the same as a resi product, just in the commercial space. But obviously the big banks, they don't need to do that. They're not that competitive as yet because still they get most of the business in the commercial space. So they're more the conservative end of the nature. Then you've got all these other new lenders playing the commercial area that do all sorts of things. And that's what I sort of say to people. It comes up a lot. I want to be with a big bank. And they say, why? So, they're the safest. I've banked with Commonwealth Bank since school. I had my money box, my passbook, and I love the Commonwealth Bank. I said, that's great too. Commonwealth Bank are fantastic. But once they realise that the big four banks have about 80% or so of the market share of the entire mortgage industry, so there's only 20% less. So people don't realise there's about 424 lenders just in the resi space. So you've got 4 banks have about 80% market share. Then you've got 420 banks or lenders have 20% of the market share. Then I sort of say, okay, how do all these other lenders survive? How can they actually have a business when they're fighting for such a small piece of the pie? And really it's because they've got to be different. They've got to differentiate different policies, procedures, rates. So I say, okay, have an open mind. So I'm sort of training people, don't worry about the name of the bank. Just worry about what they're going to do for you. Are they going to approve your loan? Are they going to give you more equity? Are they going to let you go from 1 to 3 properties? These sort of questions. So forget who it is because it doesn't matter. You've got their money. They don't have yours. It's different if you've got $500,000 in cash, then the bank's only guaranteeing $250,000 anyway. But at the end of the day, if you're borrowing off them, you've got their money. They don't have yours. So they got to get it back off you somehow.
I also like to think about these other lenders that don't have as much market share, and you say, how are they going to survive? Typically, they're going to need to do a better deal to survive, and it's going to be better for us in the long term, short term and long term. And they're typically going to bend over backwards a little bit more when it comes to say, hey, I want to lower my interest rate. You go and do that with CBA. They could be like, good luck. That's not happening.
At CBA, you're
just a number in this. Exactly. We've got the big brand. We've got the big name. We can do what we want, how we want, when we want. Yeah. But if you leave, they're not as worried. They're not as scared because they got so much business. But if you leave, say, a different lender, they're not going to want that, right? So typically they're going to bend over backwards a little bit more than bigger banks.
Yes and no. Some of the small lenders have less room to move, and some lenders take a stance that we're giving the same deal to everyone. So there's no special deals. So whether you're Bob or you're Kerry Packer or James Packer, you're getting the same rate. And that's just a stance, like an ethical stance, if you want to call it that. Then other lenders are different. So say Commonwealth Bank, like you mentioned, so they have all sorts of different deals for everyone that people don't realise. And because we're a premier broker with them, we get very good deals and we get things approved that other brokers don't, because we give them a lot of business and we give them very good business. And unfortunately, that's not a level playing field, but